Good weekend all. Ira Epstein with your SPDR ETF stock video, and this is your market wrap-up with the weekly edition for this Friday, Memorial Day weekend, the 27th of May, 2022. Be careful driving, eating, and the like. All right, interesting markets. You had 7 weeks in a row down in the S&P. You've never gone 8. And the market didn't go 8. You have had, and you are getting right now, a recovery bounce. Can they be powerful in bear markets? Yes. Do I think this is a bear market bounce? I do. Now, for those of you that wise guys that write me and go, oh, you don't even know what you're talking about, Ira, I agree. You don't have to be insulting on YouTube. Otherwise, I'll knock you off of there. It's that simple. But you're always in a bull market according to your thinking. What do I mean by that? Go back. You want to go back 150 years? 120 years? What part do you want to go? Inevitably, the stock market indices all go to higher highs. I concede. All of you, listen to what I just said. If the companies you bought today stay in business, they're probably going to be higher a decade from now, if they can stay in business. I don't know that they will, but here's what's going to happen. These indices are going to rotate those that can't make it, put in new ones that can make it. Inflation prices, because inflation generally drives things up as well, will carry things. We all know that a dollar doesn't buy what it bought 40 years ago. Do you disagree with that? If you do, don't listen to me anymore. It's just the reality of the situation. And inevitably, you're going to be higher. Does that mean that's the way to trade or invest? I don't think so. But long term, it's Warren Buffett's method to a degree. It's other people's. He does rotation. But the idea there is if a company's good, it's going to stay good, right? And if it doesn't stay good, he dumps it and rolls into something else. And he's certainly in value investing the greatest of my lifetime. So something to be said for that, and I get it. So don't be insulting. Is that fair enough? Give me a thumbs up if you like that. The other part of this is markets do move in waves, and those waves can last years. Example, did we not just come out of a bull market that I think at least peaked in this year? We broke down. This is the year that you went into your first 20% declines. So by most measures, people would say that's the correction. Now, how many of you have portfolios out there, stocks down 30, 40%? There's a number of you. Okay, a large number of you. I have friends that have great money investors, professional managed money, by the big boys. The name of the game is, are they doing as bad as the indices? So they're down. I don't know anyone that portfolio is basically up with that. Okay. So that's what trading is about to a degree. When you're looking at these videos, I'm not about investing. I am about trading. So if you don't get that, you should now get it and you should leave. You never have to look at this video again. I am not an investment advisor. I am a chart analyst about trading. Big difference. When you look this week at SOX, I've decided, hey, I was doing AMD, why not go to SOX and see what this is doing? So this is a weekly bar chart of SOX, and it has gone from just over 550 down to the 375 level. I know you're going to say, well, it's a correction. Folks, it's a 30-some-odd% break in the market value. Here's what it had done. It had been down here at 150. It tripled in value. It went up to 550, right? And now it's given back a third of that. Okay? You're probably going to tell me that's the buying opportunity. I get it. The bulls are always bullish. But as a trader, the opportunity to come out was right here. And then the bearish opportunities were over here as the market rolled down. And that's what I care about. So as I'm looking at the market, it is still in a downtrend. You still have lower highs, lower lows. You can't argue that fact. The market is trying its darn best to hold the first major moving average, the 100-week moving average of closes. The resistance in the market is 441.38 to 40. Okay, if you take out 434.51, you break the pattern of lower highs, lower lows, and finally we get, if you want to call it, a bounce. That's all that I could call it. Until the market sets up a pattern of higher lows, higher highs, and closes over 441.38 with that pattern, I am not in the bull camp. I could have reasons to no longer be short, but I already had one. If you and I take a look, here is the market on its way down. Lower highs, lower lows. First support right here. What do I teach every time you see me? The odds of a market staying under or over a Bollinger Band are 5% of the time. It is a natural area on the first hit of it to take some money off the table. Bingo. I will say it to you all the time. My course is on my website. This is exactly what I teach in it. And that is where basis, well, maybe we should bring on this number. The Bollinger Bands, that is where you'd have covered half your short. Half, not all. If you lose the embedded reading by a close over 21 in it, you didn't do it there, but you did it now. You're supposed to come out of the market because the odds favor you're going back to the closest moving average above the market, which is the 18-day average, and you start your investments again looking, may not even be in stocks, it might be in something else. But is stocks a buy? No, not on that work. Reason not to be short, big difference. KBE, same thing. I had been bearish this all the way through. Then I said the combination of, and I'll take you there. Here we are coming into the 100-week and that number, and I said the combination of the 100-week and the lower Bollinger Band is where I'd expect to see short covering. Not new buying, short covering. People that have been betting the market's going to come down to come out of the market. You got into the areas right here, and for another part, you hit the 200-week. Whenever you first hit the 200-week, you're going to see me aggressively saying, the long-term buyer is going to come in at that number. He did it back here. He will continue to do it until he realizes you're in a bear market and that number is not going to support the market anymore. You're not there. That's a one-year average. If you think it's more than that because it's a weekly chart. It's years of this average. There's 52 weeks, so a 200 week is a 4-year average in round figures. So coming down there, that's a support zone. I get it. And you're bouncing away from them. Okay, but more important to me is you lost the embedded reading. That is a reason to say goodbye to the trade. If it re-embeds, I'll take another look. If it doesn't, I'll see what it does. I still expect resistance 51.85. XLI. The market came down, and let's discuss this. This was the area we were looking here. You were with me on the weekends. These charts, other than stocks, I've had them up every week. This is where I said, and I'm sure I said it, momentum is down, but you're hitting the first area where I think the pros are going to cover shorts now. Market slipped through it. Market starts fighting at it, and you pop back. That's the point. Nobody can pick the top and bottom. It's luck, okay? Zones are a whole different thing. That's a skill. So you're looking for tight zones, not broad zones that, hey, I'm always going to be in the zone. Come on. That's like saying in the stock market, you know, eventually it's always in a bull market. I started off that way. And go back and do your history. Every 10 years, the Dow's generally higher and all that. And it's because of what I explained, the rotations. The same 30 stocks aren't in there all the time. You know that. They rotate. What about the S&P 500? What about the 2000? What about the ones that go broke? They bring new ones in. They got more value. It changes the whole game. Okay. If you look at this, you're embedded. Now, this is the first challenge of XLE this week where you got here. What would I say? The chorus. Take some money off the table. First challenge, but embedded, not the whole thing. SPY, first challenge right here. As you're coming into that, I'd be telling you, cover shorts. Maybe you can slip down here. I'm positive I'd say that. But Would I tell clients ever to sell under a Bollinger Band? Slap me across the face if that's what I do, because I won't do that. Now, if you take out on an outside week this high, within 2 weeks of that occurring, which just happened, you often, not always, often, it's a sign the market wants a lift to the nearest main moving average. That could be the 430 area. That number will drop a little bit because the slope of the averages is falling. So price getting up to that could happen. It's only $15 away. I wouldn't be surprised. GLD. You have a market momentum down, but the battleground's right here. It's been there. This market has been fighting the 100-week moving average of closes for 6 months. It just keeps fighting at that number, not letting it go. Okay, I understand the inflation story. There's an element of people that want to own it, but there's nothing yet bullish about this chart. No, there's nothing super bearish. The pattern's higher high and lower low. I'm just caught in no man's land on that. Gold miners, what do you think I'd be telling you? Follow the 200-day average. Why would I ever tell a trader anything but the first time you hit a 4-year average, after you haven't hit it, you're going to find probable support at it. That's what you're trying to do. So where's the resistance now? Pretty simple. 35.29 to 35.24. It's going to be very hard to get through those numbers. ARC. Okay, eventually Kathy's going to get a break, and she caught one. Yes, she caught one. Classic embedded situation. You go down to the Bollinger Band, and when you hit it, you've had fresh sell signals along the way. That's the cover zone. If you lose the embedded reading, which lo and behold you did today, the odds favor, unless this thing embeds immediately next week, in other words, collapses again, where both numbers are under 20, odds favor the market's going to try to set up a rally to the 18-week moving average of closes. And from here, that's about $13 away. Be a heck of a nice rally. But interesting play, okay? This is the first time, I want to go on record, I am not bearish or stock on a weekly basis. Fair enough? I have been there. I've been saying I don't understand why people would be going into this. They have lost they have lost 3/4 of their value. This was a stock that was 159.70. It just got down to 26.10. So I know that those of you that hold on are diehards. She's got a cult. They believe it. You lost most of your money. And now the question is, can she make it back? God forbid the guys that bought it up there are still in it. How many years is it going to take for you to get your money back, if it ever gets back? I don't know. Amazon, all of a sudden the battleground is crystal clear. You had 3 weeks, 4 weeks under the Bollinger Band. I teach you that the most you typically get, generally speaking, you want to go to the casino table. If you're 5 weeks in a row under a Bollinger Band, it's rare that you get to the 7th. Did it happen in some of the stock indices? Just happened in the S&P, right? We had week after week, and you've done that. It's rare. It's the exception to the rule, dramatic. So a bounce here is in the cards. Now, it never did embed. So if you get over 23.16, it opens the door for short covering. But you got to get over the 23.16 to do it. All you've done is move to the right-hand side of the Bollinger Band. You have not yet said uncle to the short side. In Apple, classic. We were here last week talking. I said, you're under the Bollinger Band. Maybe you get to the 100-week average, but that's where the pros are going to be saying, okay. Could it get down to 97.68? Yeah, but that's another dramatic drop. What's going to make that happen? Don't see that. So I think the pros are just coming out of shorts, if they are short. First of all, I think they would have come out under the Bollinger Band right there. That's what I personally think. And now you're getting a small bounce in the market. Is this bullish? No. It is still very much in the bear camp, all the way up to 162.27. Get over 166.48, and you'd have to go back to the drawing board. Until that occurs on the concept of lower highs, lower lows, momentum, forget oversold. It's any way you want to look at it, it's not. We'll see what happens. Tesla, finding its footing against the Bollinger Band, the 100-day. It's been in a downtrend. I think the pros covered right here. The rest of it to me is just the gravy. I think they're out. So were there short plays? Galore. Let me just show it to you. Lower high, lower low. You rally to the 18-week average. Your stop's over that high. The door is open for the lower Bollinger Band is the first objective. You even hit the 100. You walk away from the market. That's what I think the pros did. So I think the selling pressure from aggressors on this trade has abated. Is there anything bullish? I don't see anything bullish on the chart. That doesn't mean it can't get short covering rally and go further. But is there a reason to buy? Do you have higher highs, higher lows? No. Do you have something on this chart that is screaming other than it's cheap on a relative basis? That I can argue it is. It went from 1152 to 620. It lost half its value. Tesla lost half its value. How many of you own Tesla there and you watched that happen? When you're an investor, you go, you're aggravated, but you don't sell it, right? So you're always looking, does it get a day up? But it has not thrown out new buy signals. Rivian, as I said, I didn't have the guts to step in against the lower Bollinger Band. I always have some money you want to throw away at things, but should have done it, just throw away money. Here's a stock that's gone up a third already. The only reason I even watch it is because I believe in their trucks. I think they're going to have a hit with these trucks because they have a client with a big A name. Who is the client? If Amazon can keep Rivian, if they can deliver it, if they can get past this nonsense that they're having and can deliver some of these goods, I think they have a shot. But if like Ford dumped other things we saw this week in them, no, then you're going to not see these things develop. You always have to watch who's dumping what and things, and you have to wonder. But if their biggest client, and that would be their client is Amazon, as I understand it, away they go. They're here in Normal, Illinois. They've got problems galore. Every manufacturer of a car has supply issue problems. But like their one client, okay? And the chart's no longer fully in the bear camp. TLT, if you lose the embedded reading, you're going to get more of a rally, which will have my head scratching, I admit it. The trend is still down. You've ridden the Bollinger Band. The pros have been selling the rallies with an embedded reading, making money, in my opinion, in this. And that I understand. That one's the trade that I like. Okay. One of the things that traders use, and you might want to do it, is in stocks that people just want to be in and out of. There's a lot of you that do that all the time. Pivot points might be something you want to look at. I created a video series. I didn't create this indicator. A very famous trader did. And what it does is it looks at the previous day's range to develop a pivot with sell points above, where you're trying to buy back at the pivot, buy points under, and I attach my momentum of the slow stochastic to it. It's interesting. It's meant for in and out trading during the day. So if you're one of those type of traders and you're saying to yourself, I like this action, I want something more, take a look at it. It's a 3-part series that I created in videos. It's yours free. Go to our website under free offers. You can follow your cursor up to the top here. Give it a click when you see the icon. That'll take you there too. In the meantime, have a great Memorial Day. Don't drink too much. Certainly don't eat too much. And I'll see you all come Tuesday. Good holiday to you all. Bye-bye.